Okay, so you've definitely heard the name Citadel. On Wall Street, you've got your giants, and then you have, well, forces of nature. And today, we're going to pull back the curtain on one of the most powerful and honestly, one of the most secretive firms in all of finance. We're going to break down exactly how this empire got built and what its incredible influence really means for the markets.
To really get a feel for the kind of scale we're talking about, I want to start with just one number: 25%. Think about that. Citadel Securities, which is just one half of the company, handles one out of every four stock trades in the United States. That is just an absolutely colossal piece of the pie. So the real question is, how on earth did they get here? Well, to answer that, we're going to break this whole thing down into 5 key parts. First, we'll look at how Citadel became this new Wall Street colossus. Then we'll untangle its really unique two-headed structure. We'll peek inside the machine itself, get to know the man who built the empire, and finally, we have to talk about the controversy and what the future holds. So let's start with the big picture, right? Citadel is not your grandpa's Wall Street bank. This is a totally new kind of beast. It's a tech-driven model that runs with just a fraction of the employees you'd see at a Goldman Sachs or a Morgan Stanley. But somehow it wields this unbelievable power. You know, the source material calls Citadel the prototype of a next-gen bulge bracket firm, and that just hits the nail on the head. They've figured out how to combine mind-boggling scale with just ruthless technological efficiency. It's this model that uses data and pure speed to run circles around the older, slower competition. They're not just playing the game, they're basically writing the rules for the next generation, and everyone else is just trying to catch up. Now here's where it gets really interesting, and maybe a little confusing if you don't know the setup. To really get Citadel, you've got to understand that it's not one company. Nope, it's actually 2 totally distinct, super powerful businesses, all living under one roof, built by one guy. And the article we're looking at uses this perfect analogy. It calls Citadel a two-headed business beast. I love that. Because on one side, you have this monster of a hedge fund, and on the other, you've got a sprawling market maker. Same name, same founder, but what they do is completely different. So let's break that down. So how do these two heads work? Well, head number 1, the hedge fund, that's Citadel LLC, is all about investing money for its clients. It uses these independent teams or pods to try and score big returns, and then it takes a cut of the profits. Now, head number 2, Citadel Securities, is the market maker. Its job is to actually make the trades happen. It makes money on the teeny tiny difference between the buying price and the selling price, the bid-ask spread, but it does that on a scale that is just hard to even comprehend. And that hedge fund side? It is ridiculously good at what it does. Its main fund, Wellington, has averaged an annual return of 19.2% since 1990. That's nearly double what the market does. To put that in perspective, if you'd invested $1 million back then, you'd have over $450 million today. Yeah, that's how you build an empire. So you're probably asking, how does this machine actually work? What is the secret sauce here? Well, it really boils down to 2 things: absolutely bleeding-edge technology and an incredibly intense, high-stakes culture. Let's talk about the tech first, because it's just insane. Citadel has over 100 petabytes of data at its command. That is more information than what's stored in the entire Library of Congress. They have 260 PhDs on staff just to crunch that data and find tiny little market advantages. In fact, the term high-frequency trading, HFT, it was literally coined inside their walls. They didn't just adopt it, they helped invent it, using massive computing power to make thousands of trades in millionths of a second. But all that tech is only half the equation. The other half is the culture, which is, let's say, notoriously demanding. This quote from a former executive just says it all. It's like playing for a championship sports team. You either perform at the absolute highest level or you're out. Another former employee said that the founder, Ken Griffin, demanded 150%, and nothing else in your life should matter. Whoa. And you might think people would run screaming from that kind of pressure, but nope, they are lining up to get in. Just check out the odds for a summer internship. Out of more than 100,000 people who applied, the acceptance rate was 0.4%. For comparison, getting into Harvard is way, way easier. It's easily one of the most selective workplaces on Earth. All right, so you can't have this massive, complex, demanding machine without a mastermind. And this whole thing really comes back to one guy. You simply cannot tell the story of Citadel without talking about its founder, the incredibly ambitious, driven, and, yeah, often controversial billionaire Ken Griffin. I mean, his origin story is pure Wall Street legend. He started trading out of his dorm room at Harvard. And get this, he actually convinced the school to let him put a satellite dish on the roof so he could get better data. He founded Citadel in 1990, came incredibly close to losing everything in the 2008 crisis. His main fund dropped 55%, but he clawed his way back and then more recently made waves by moving the whole empire from Chicago down to Miami.
And that whole journey, well, it's paid off pretty well for him. According to Bloomberg, his personal net worth has soared to $48.3 billion. That makes him the 31st richest person on the entire planet.
And when you have that kind of money, you can buy some, let's just say, interesting things. We're talking priceless art? Sure. Historical documents? Yep. But he also famously owns, and I am not making this up, a $45 million Stegosaurus skeleton. It's the kind of detail that just adds to this almost mythical aura around him. So, of course, when you get this big and this powerful, you're going to attract a ton of scrutiny. It's just inevitable. So let's dive into one of the biggest controversies swirling around Citadel, and then we'll take a look at where this empire might be headed next.
Okay, the controversy really boils down to 4 letters. PFOF. It stands for Payment for Order Flow. Now, it sounds complicated, but the idea is actually pretty simple. It's when a market maker, like Citadel Securities, pays a retail broker, like a Robinhood, for the right to handle their customers' trades. And this blew up into a massive story during that whole GameStop saga back in 2021.
And this all leads to the big, thorny question that regulators and critics are asking. Does this whole setup create a fundamental conflict of interest? And does it actually end up hurting everyday retail traders?
So here's how the debate shakes out. On one side, you have Citadel, and their argument is, hey, we win all this business because we provide the best price. Period. They say those payments are basically just a rebate that allows brokers to offer zero commission trading, which, we all like. But on the other side of the coin, you have the critics, and they're saying, hold on a second. They argue the whole practice is much scrutinized because it raises serious questions about whether traders are truly getting the best possible deal or if the system is designed to benefit the market maker first. And that's a debate that is very much still alive today. So after all that, what's next for Citadel? Well, this quote from Ken Griffin himself really tells you everything you need to know about his mindset. For him, building this multi-billion-dollar empire that handles a quarter of all U.S. stock trades, that's not the end goal. That's just the starting point. Think about that. It leaves you with this one huge question. Just how much bigger and how much more influential can this Wall Street colossus actually become?